I have to admit that I knew this week was going to be wild, right? We had inflation, we had Fed day, we had dot plot, we had interest rates. From my perspective, I got 3 out of the 4 right, but the one I missed is important. I did not see the behavior and interest rates go in the direction it did. We're going to have a conversation with the boys from Convoy Home Loans, Dustin and Jonathan. Let's go to Jonathan first because he's got a baller view there out his apartment, man. Damn, life is good. How you doing, Jonathan?
I'm all right. I'm all right. I'm here so I can see my property that's going on construction. Make sure
You
people
got
are
a
doing their
little
work.
little telescope set up going, hey,
Yeah,
stop your smoke break. Get back to work.
yeah,
Get back to work.
yeah.
There you go. Hey, Dustin, how are you?
Good, how are you?
I'm all right. So let's just kind of break down the week as it unraveled, right? I think Tuesday was the day we got the CPI reading. It broke from 4.9 to 4, as memory serves. Obviously, headline CPI core went from 5.5 to 5.3. Month on month was 0.1. And it's just generally speaking, inflation went the direction I expected. I will say right here, right now, that the July CPI reading could be as low as 3 or even 2.9. Given the monstrous base effect going. So let's talk about at least CPI first, guys. Did it come in as expected? Any surprises there? We'll go to Dustin first this time.
Yeah, I think there wasn't a surprise in terms of the direction that it went. Now, the kind of overall cat and mouse game between what the feds are portraying versus what the market's portraying. Maybe the headlines are the headlines versus what the feds care about is the core, right? And then we've got, feds basically portraying that now because of that, we will see maybe 1, probably 2, according to the dot plot. What was it? Was it 12 of the 18 Fed officials said they'll see 2 more?
Yeah, 12 of 18. I predicted 13. It was 12. You're right. 12 of the 18 said we're going higher and we're going 2 times, 2 more this year. We'll talk about that.
Yeah,
no,
so
the market's not in belief.
Who's right, who's wrong, and that's going to still portray into what we see as mortgage rates. And obviously there's the July, whatever it is, Fed meeting. I think the chances right now are like basically 50-50.
Yeah.
What happens then? I don't think there's any. I don't think the feds will. I don't think there's a need to. I think it just allows us to stay at this kind of 5 federal fund rate for a little bit longer before actually a cut is somewhat imminent. If they raise, like the feds are saying, I mean, they're going to raise and then cut real quick, or it'll be a lot quicker.
That's funny. We'll get into that in a minute because I think you're absolutely right, but we'll get there next. Jonathan, I'll go to you because when we roll out of Tuesday, we went to Wednesday and we actually got PPI, Producer Price Index. That thing is fallen out of bed, man. It's down 11 months in a row. I think it was like 1.4 or 1.8 or something with a 1 on it. It was wild to look at that thing. Again, PPI not quite as important to consumers, but certainly a leading indicator. So again, I think inflation, generally speaking, this week continued its downtrend. What'd you see, Jonathan?
Yeah, absolutely. But I mean, obviously, we're not seeing the markets react in a positive note to any of this. And by positive note, I mean obviously not on the stock sense, but more in the mortgage rate sense.
Yeah.
And I think the commentary that people weren't wanting to hear was what the target now minimum is 5.6, right? From the feds, I think they said.
Yeah.
And
up to,
up to 5.6. And I mean, some of them are saying even higher. So it's kind of a weird situation that we are in. And I think, even if inflation, I mean, if it doesn't come down to 2, like they're targeting, I think we're going to see another raise. And a lot of my clients are calling like, hey, the feds didn't raise, like, are rates okay? Like rates are going down, right? And I'm like,
nope.
it's not working that way, right? So it's really easy to see the headline and assume what you want to assume, but unfortunately the market just doesn't believe it, right? It's not the same way.
Yeah, so let's get into the Fed Day. Fed Day was Wednesday. We obviously got the pause. Some people are calling a skip. We talked a lot about on my channel the SOP, right? What's often called the dot plot being the most important thing. And there was a lot in the dot plot. We'll get to all of it, but I think first we're going to talk about what both of you brought up. I believe we are watching theater in action, right? The Fed has really 2 tools, really 3, I guess. They have the actual funds rate, which they paused. They have their interviews or presentations or speaking engagements, but they also have once a quarter, so 4 times a year, this thing they call the dot plot, which is basically 18 of them put little dots and they answer questions, right? Rates, inflation, GDP, unemployment. And the one that everybody is focusing on, again, is Dustin brought up, 12 of the 18 Fed presidents said we're going higher. Several of them said 3 times. I think it was 2 of them said we're going up 3. But the median, or the average, if you will, was 2 more in that year. I just want to say right here, right now, that is just pure theater. It's a suspense movie. It's the Fed being higher for longer. The Fed doesn't want the market to know that they're done. That's kind of what I think about what's going on. So we'll go back in reverse order. We'll go to Jonathan first this time. What do you think of my opinion there?
I mean, I think you're correct. Obviously, but I don't know about a reversal yet in terms of a drop in rate, but I think definitely holding pattern, like we've been in, is more realistic than not. Unless we all of a sudden see inflation for some reason pop back up, right? Which we're not really expecting. But a one slight point up in the negative reaction is going to cause them to raise rates. But I think if we stay where we are or lower, then we're probably going to stay where we are in the federal funds rate as well.
Yeah. So Dustin, the other things that were talked about in the dot plot was unemployment, and it's really weird. So the last dot plot was obviously 90 days ago. So what happened in the interim? The Fed presidents, the 18 people that do this, they said their expectations for unemployment went down. It went from 4.5 to 4.1. Their expectations for GDP went up. They originally thought 0.4, now it's 1.0. So generally speaking, I think the Fed was less negative on the economy. I think the average Fed president sees a soft landing at the moment. So when you look at the entire dot plot and just all the Fed, gobbledygook, what did you see in all that, Dustin?
I think they're doing behind closed doors what they're trying to do in terms of they're playing the game of making sure that the market isn't going to have a 100% indication of what they're going to do. They want to scare the market. They want to entice everyone to believe at least that 2 more, possibly 3, according to some officials, most likely 1 according to them, based on the dot plot. We'll see another rate hike, but the market right now, if you're looking at it, believes maximum 1 and most believe none, or we would see a completely different change in where mortgage rates and the stock market would be heading. So it's, when I alluded to it earlier, it's the cat and mouse game between kind of Wall Street, smart investor market people versus what the Feds are doing. And the Feds are trying to hold on as long as possible to the game that they're trying to play.
Yeah. And I just want to be full disclosure. I love admitting my mistakes. I love celebrating, good guesses. But I did miss interest rates. I thought interest rates would come down to like 6, 8 by the end of the week, and they're not there. And the reason I thought that is I thought inflation print would be celebrated. I thought more and more people would realize that, the July CPI, at least headline it really could be 2.9, given we're rolling off the largest base effect of the 12-month cycle. It's going to shock people, and more people will talk about that. But I expected that. PPI rolling out of bed, I did not expect it to be so low. I guess to your point, Dustin, the Fed's doing their job. The Fed probably sees all of this, but it doesn't want the market to overreact. So they're just talking tough. And basically by talking tough, they were able to hold rates stable instead of letting them fall. So Dustin, if somebody wanted to reach out and see what's what with rates and programs, where are we sending them?
You can go to convoyhomeloans.com and just mention that you came from ORAT. That way myself or John can help you out directly.
Yeah, I can't stress this enough, folks. If you go to the website, awesome stuff there. But if you select ORAT, you get one of these 2 gentlemen, and they will take care of you. So guys, thank you so much.
Thank you.